Many people are learning how to make money with AI, but income alone does not create wealth. Wealth is built when income is directed into systems that compound over time. In this video, I will walk through a clear framework for turning small AI earnings into long-term financial growth, even if you are starting with modest amounts. This is not about making more money quickly. It is about making the money you already earn work differently. Let's begin with a simple distinction. Income and wealth are not the same thing. Income is active, wealth is accumulated. Income depends on effort, wealth depends on structure. When you earn money through AI tools, freelancing, content creation, or automation, you are generating cash flow. That is an important first step. However, if that cash flow is immediately spent, your long-term financial position does not change. The real shift happens when income is redirected into assets. That redirection is what begins the wealth-building process. Here's the framework in its simplest form. AI income creates cash flow, and then cash flow becomes investment capital. Investment capital compounds. Compounding builds wealth. If you understand this sequence, you understand the system. Now let's walk through each step in practical terms. Step 1. Separate the income. This is where many beginners unintentionally lose momentum. Money comes in, then it blends into a checking account, and then disappears into regular expenses. Instead, create separation. Open a separate savings account dedicated exclusively to AI income. Every dollar earned through AI projects goes into that account first. Not for spending, not for upgrading tools immediately, not for lifestyle purchases. This separation creates clarity and control. You are no longer simply earning money, you are directing it. That structural change alone can shift your financial behavior. Step 2. Choose a beginner investment platform. This is where many beginners start to feel overwhelmed, so let's simplify it. You only need one basic investing platform to begin. Before we look at specific options, a brief note. This content is for educational purposes only. I am sharing a structured approach, not personal financial advice. With that clarified, in the United States, commonly used beginner platforms include Fidelity, Vanguard, and Schwab. The objective here is not active trading. The objective is long-term participation in the broader market. You are not attempting to predict which company will perform best next year. You are building exposure to long-term economic growth. Step 3. Start with broad index funds. Rather than selecting individual companies, many beginners start with broad index funds. These funds track large portions of the overall market, such as the S&P 500 or the total U.S. stock market. By investing in a broad index fund, you gain exposure to hundreds of companies at once. This increases diversification and reduces the risk associated with concentrated positions in a single company. The goal is steady participation over time, not short-term prediction. Consistency matters more than precision. So what does this look like? Assume you earn $75 from an AI project each month. If you invest that $75 consistently, that equals $900 per year. Over 10 years, you would contribute $9,000. Historically, broad market index funds have averaged around 7% annually over long periods, although returns are never guaranteed and markets do fluctuate. At that average rate, $9,000 contributed over 10 years could grow to approximately $12,000 to $13,000. That additional $3,000 to $4,000 is not the result of a single large deposit. It is the result of disciplined repetition and compounding. The key variable here is not the rate of return. It is consistency. Step 4. Automate the habit. Once you understand the structure, automation becomes important. Set up a recurring monthly transfer from your AI income account to your investment account. This removes emotion from the process. You are no longer deciding each month whether to invest, you are following a system. Wealth building is rarely dramatic. It is structured, repeated action over long periods of time. What does this actually change? When you connect AI income to investing, something meaningful shifts. AI is no longer just a way to generate extra cash. It becomes a feeder system for asset accumulation. Every project you complete and every dollar you earn has direction. Instead of temporary income, you are building long-term leverage. That is the difference between earning money and building wealth. If you want a simple action plan this week, here is what it could look like. First, open a separate savings account dedicated to AI income. Second, research one beginner-friendly brokerage platform. Third, learn how broad index funds function. Fourth, make one small initial deposit. Finally, set up a recurring monthly investment. The objective is not to become wealthy overnight. The objective is to begin compounding. Income creates opportunity. Systems create durability. When income is consistently directed into assets, wealth becomes the byproduct of structure rather than effort alone. That shift is where long-term financial stability begins. If you're serious about turning income into assets and assets into long-term stability, subscribe to Van Fox. Each week we break down practical systems for building modern wealth.